everybody's mind has been on inflation. Are we about to see another 22?
I think this is interesting. Our friend Darius Dale at 42 Macro puts out this chart on PCE, personal consumption expenditures, which is what the Fed watches. And I mean, it looks to me like it's probably going to start dropping in the second half of the year going into next year. I mean, and that's a positive, obviously. That doesn't tell a big inflationary story, even though the story has been really oil.
That's right.
More than anything.
That's
so
right.
let's look at oil. Here's oil. February 26th, oil was $65 a barrel. Obviously, it nearly doubled, and now is
bombs went off in Iran. The Strait of Hormuz shut down, and yet here we are, and we're what? $12 more expensive.
Yeah,
or,
I mean,
$8 more expensive.
I filled up last night, and oil's come down, or gas has come down a lot.
Dramatically, yeah.
Now, so that looks better, but now you look at yields, and yields are up, what, 0.5% basically on a 10-year Treasury. That drives mortgage rates. That
Right.
drives a number of other things. So, that's still kind of speaking from an inflationary standpoint. So we'll see. But, I mean, it sure looks like inflation could start dropping in the back half of the year. Sure. Meanwhile, as we look at Q2, if you look at the S&P in terms of outperformance versus bonds, it's been pretty crazy. The S&P's outperformed the bond market by like 12, 13%.
Yeah.
In that time period. So one question you could ask is, hey, are they ahead? Statistically, we're in a midterm election year. Maybe you hadn't heard that. Q2 of a midterm election year, statistically, since 1950, is the worst quarter.
Right.
Q1 this year was negative.
Yeah.
Obviously, Q2 of this year has been positive.
Right.
It raises maybe a question about Q3.
Right.
Don't know.
Did we pull some returns forward? I
Maybe.
guess. Right.
And, of course, earnings have been very positive. I mean, earnings were up roughly 11% year over year. That's really not priced into the market because the S&P has risen about that much just with what earnings have done. And actually, it's not even that much. But bottom line, the main things I'm wondering are, have returns been pulled forward at all? For example, if you look at the next chart, here's momentum versus the S&P in that same April time period. Momentum is up 19%. Over the S&P,
over the S&P,
not bonds,
in a good quarter.
The S&P,
Right?
yeah. And so that means it's up 34-35% on
Right.
bonds, which is bananas. Last chart. Interestingly, if you look at the Magnificent Seven, though, in the same time period relative to the S&P, it's actually trailing a little bit.
Yeah,
So
it
that
looks like they got to bounce off the
interesting.
low at
Yeah.
the end of March and then have come right back down to it. And
Keep in mind, those are the ones that make money.